Hi guys, welcome back. Okay guys, at first I really didn't want to make video today because this is just so bad. I just feel like we are the little puppet there, squeezed and destroyed by the Wall Street right now. I am feeling so sick of the drama, the story that has been spreading around. I have stopped making market updates for 2 days because the index has no correlation with the stocks right now. So what is the point to look at the stock index? What is the point to look at Dow Jones, S&P 500, NASDAQ and Russell 2000 while they don't reflect our portfolio? Unless what you buy in happen to be the heavyweight stock inside these index. On one side, the Fed doesn't want the market to crash. Lots of money is pulling up the index fund by pulling up the heavyweight stocks, rotating every day, so retail investors can't take advantage of that. Whatever you chase, you end up losing, while the index does nothing but go up, or at least not dropping. So it maintains being up and down at the top level like a peaceful land. While on the other side, the individual stocks are heavily shorted, like there is no tomorrow. I see this stock market as a political stock market now. There's no fundamental, there's only politics. What the Fed and what Wall Street wants it to go. Index is going one way, stocks are going the other way. Unlike before, when the index go up, stocks tend to go up if the fundamental is good. But right now, it doesn't matter. It's just index go one way and stocks go on the other way. Just look at today. All the index were up. Dow Jones up 1.29%, S&P 500 up 1.2%. Even NASDAQ is up 0.8%. Russell 2000 is the strongest, up 1.8%. And yet, you look at ARK, down 2.6%. Wall Street on one side, ARK on the other side. And I think right now, the Wall Street is heavily shorting ARK ETF. I think wait until we see their SEC filing to review their Q2 holding. We're gonna see a lot of the institutions shorting ARK ETF right now. I think the short sellers are having a party right now. And at the same time, Bitcoin is crashing. A lot of people said it's because of Elon Musk's tweet, but I think it's not that simple. Everything is driven by Wall Street. There's no way that the Bitcoin can run up like this without the institutions. And the whole time it was running without volume. The volume got less and less. So it was always meant to have this big correction anyways. Once it did, bounced back up again without volume, met resistance and could not go through, then of course it would follow by another crash. Today it seems like ARK has officially dropped below the 250 moving average. Tuesday was a lot of buying the dip, so it seems like there was still hope, and yesterday it was a maybe, dropped below and didn't get back up. And today was more of a confirm that it has dropped below. So this is important level because it's kind of telling whether it's still bullish, whether it's a correction or it has turned bearish. And right now it shows that it has turned bear. And of course, the Wall Street has opened their short position a while ago. Right now it's just inviting retail investors to join in the party. Dow Jones has some rebound today and touched the 20-day moving average, got rejected and came back down. For now, it looks like it can go lower to reach at least this support I drew before and happened to be around 60-day moving average. So around 33,100. So probably 9 more hundred points to go. That would be around 2 to 3%. Yesterday, I said that if the stock dropped below the lowest point of Tuesday, that means chances are there will be lower low. We see for ARK, Tuesday the lowest was 98.9 and today the lowest got to 97. So looks like it's not gonna hold. Right now we are at the important support of 97. So if this cannot hold, don't be surprised it can drop to around 80 here. So that's 20% more dropping. And if ARK's ETF can drop 20%, imagine the stocks they're holding could easily drop another 30 to 50%. I really hope ARK can overcome this difficulty because I really like the way they research and think, the way they endorse innovation. And I love Cathie Wood, so I don't hope anything bad happened to them. But for now, we need to expect to continue falling, just because I don't think Wall Street would stop attacking. So this would still create the risk of systematic sell-off. So today, even the Chinese ETF KWEB had dropped 3.6%. It dropped that much mainly because of the tech giant dropping, like Alibaba, for example. It dropped 6% today. I think it's the biggest drop since last year when it was Christmas Eve that it dropped 13% because of the Chinese government starting the anti-probe. So it was a political issue. And today it dropped because of the earning. Surprise, surprise, like I said a few days ago, let's just get this over with because we know that whatever earning it is, it's gonna be a bomb. So was it really that bad? So Q4 revenue of 28.6 billion US dollar, year-over-year increase of 64%. That's a lot, but consider the merger with the big retail. But if we factor that out, it still increased 40% year-over-year. Adjusted profit of 26 billion yuan, year-over-year increase of 18%. Active consumer user was 811 million people, increase of 32 million in the last year. So there's nothing wrong so far, but the bomb was really the net loss of this year. Net loss of 1.17 billion compared to the profit last year. So we know that Alibaba has been making profit for a long time already with steady and fast growth, except this quarter with the net loss. Why is that? Well, because they were fined by the Chinese government for the anti-probe with 2.8 billion. So if we deduct the 2.8 billion, we would have a positive profit of around 1.7 billion US dollars. So it's still an increase of 30% from the year of 2020. It also seems a concern for a lot of analysts for Alibaba to have slower growth in terms of the profit. And it's because Alibaba has been spending a lot more on infrastructure building, such as logistics, and expanding overseas, as well as expanding to other new territories, such as grocery shopping. And they have been expanding overseas. We see that this year they have finally achieved a billion active users. Wow, a billion active users. Tell me which e-commerce platform can have a billion active users. And out of all of them, 891 million is from China and 240 million users are from overseas. I think this number is looking quite attractive and it would keep on growing. And I think this is what the Chinese government wants very much, to increase overseas users. And this can help the export of China solve some issues, especially the excess of manufacturing capacity. This is making use of the resource domestically. So this is why I really don't think that the Chinese government would do anything to harm Alibaba. I think this is what they want strategically. Another reason was because of the Ali Cloud business slowing down, because in Q1 they lost one big client. This is why it's always not a good idea to have the business focusing on a few big clients. But at least for Ali Cloud, the top 10 clients only accounts for 8% of the revenue. It could be much worse, much worse. I mean, if you just give an example of Palantir, You can pull up the chart to see the top clients and see how much they account for the percentage in the total revenue. For now, BABA has dropped to exactly the trend line I drew before and stopped dropping. As you see, every time in the past, several times it got supported by this trend line and bounced back up. This is since the IPO back in 2015. Every time it touched the trend line, it just bounced back up. So this might be the time that it can start to bounce back up again, because it's quite an important support. But like I said before, I think at most it can drop to 190. We'll see. But if this support doesn't hold, then not just Alibaba, I think we might turn bear, because BABA is just the kind of the index, the FANG for Chinese stocks. So we had quite some divergence these few days. Some have dropped below the lowest low of yesterday and some didn't. Like for example, SOS. Well, because Bitcoin had dropped a lot, so it makes sense, right? And we have a lot of stocks that did not drop below the lowest of yesterday, like WIMI. It still has some distance from the lowest low. And Tuya, EH has not broken the lowest low. What dropped the most for us today is ZEPP and NEO. No surprise for ZEPP, any earning would be a bomb. So the bomb was because of the net loss of 0.02 US dollars from positive profit to negative this quarter. And the reason was because the decline of Xiaomi's delivery because of the new generation of the Xiaomi band. So they're saying because the consumers would want to wait for the new products, so they're not buying the older products, similar to what happened with iPhone 11. But on the other hand, their own brand Amazfit and ZEPP had an increase of 111%. That is a good sign, because as I said, we want to see their own brand to do well. This is where they get bigger margin. So the CEO said because of the COVID, their sales in a lot of the other countries, the key markets, are still affected, but yet they are still meeting the expectation. And they're gonna continue releasing new products. So I think this net loss is also because they had increased the R&D expense by 28%, and also sales and marketing increase of 65%. So these two together were making up more than 20% of the revenue versus 15% of the revenue last year. So that would explain a little bit. Also, we know they have spent more money to invest and acquire the companies that we mentioned before. So the company is quite optimistic of the later quarters. So the CEO is quite confident that the company can turn into positive profit again starting from the next quarter, which is this quarter we are in, the Q2, and sees a big increase of revenue than the Q2 of 2020. If that's true, I can't wait for the next quarter's earning, because all the R&D expense, they're spending on developing the new products to increase the new products, right? And those would be out in the market later, so it would result in the revenue later on. I know the share price has been dropping so bad today. Not just today, for a while. So this is looking really bad, but the chart is the chart. It doesn't represent always the company's fundamental. Now I bought ZEPP starting from when it was 11 because I thought it was undervalued. And now it has been even lower than that. Right now the market cap is 500 million. Last time I checked, they're holding cash of 700 million. So technically, they can buy back their whole company, which I don't think they would do. But this is how ridiculous the valuation is right now. So I'm not too worried about ZEPP. I still think they have bigger plan, bigger future ahead of them. Xiaomi owns around 20% of ZEPP's share. So if anything, as long as Xiaomi doesn't die, I think ZEPP is still okay. But if you see the volume today, I think this is very obvious that ZEPP was today's hot stock for short sellers. Because what's easier money nowadays than shorting a stock that reports earning, right? Because why not? It's so easy, at least 10% of dropping, at least. I mean, for a giant like Alibaba with a market cap of 600 billion can drop 6% because of earning, then what do you expect for a small cap to drop, right? You know, if you think about it this way, it really didn't drop that much to be 13%. I mean, if you compare to Array, what I bought the dip yesterday, ticker symbol ARRY, it reported earning and it dropped 46% in one day. And this is dropping from $54 a few months ago, back in January. It had been dropping. And when you thought how much lower it could be, right? So you feel like, okay, maybe I can hold through the earning because I don't think it's gonna drop that much more. And next thing you know, boom, another 46%. Because why not, right? This is such easy money for short sellers. Right now, it's not a normal market, guys. It's a crazy market. I don't think anybody has seen a market like this, where the short sellers are having so much fun, so much partying. But at the end of the day, I think things would need to come back to the normal state, normal valuation. Right now, ZEPP is trading at the PS ratio lower than 1. If we use the Q1 earning and the expectation of the Q2, we can get that their PS ratio is roughly equals to 0.8 right now. This is lower than a manufacturer's PS ratio or supermarket. And yet, this is a technology company, while it's treated less than a manufacturer's valuation. I understand that it was a manufacturer for Xiaomi for a long time, but wait until the brand ZEPP or Amazfit dominate their sales. They should be at least trade at the valuation of a PS ratio around 5 to 10 to be reasonable. So it's 6 times to 12 times from here if they can achieve their vision of a biotech company. And there are other companies that trade with a much higher valuation too, with technology company. For example, NIO is trading at the PS ratio around 15, and BNGO is even crazier. It's trading around the PS ratio of 100, even after a big fall like this. Another one that dropped a lot is NIO. I think this is heavily shorted right now by the short sellers. As it was one of the most popular stocks in the stock market last year, then now it is also one of the popular stocks to be shorted, just like Tesla. And for Tesla, I think they won't stop until it reaches 400. And NIO, next support at 25 to 28. And it's not very strong support there. So if it dropped below this support, next is 25 to 27. And lower than that, 16 to 19. So first support, 25 to 27. Second support, 16 to 19. Easy money to make to be shorting right now. Wait until retail investors FOMO into shorting. Then it might end. But there's no way I will short my baby NIO. If I need to short anything, I will short the stocks that I always felt that it was overhyped and I did not look forward to the future. Like for example, this Arrival Group. I don't have the chart before the merger. It was traded with the ticker symbol CIIG, I think. It might be a good stock to short. I wouldn't be surprised if it dropped below 10. Well, anyways, I'm not here to suggest you to short any stocks because at the end of the day, it is always risky to short anything. It's easier to go long than go short. Maybe except right now, though. I might open some short position to hedge my portfolio so I can cover up my loss if the market continue going south, but I know that it's risky and might end up losing everything. So I won't suggest any short position here, okay? To sum up, a few days ago I said that we need to watch out for 2 alerts that could create systematic sell-off. One is the dangerous signal of ARK ETF. The more it sells off, the more they are forced to sell out of their position and it would create some domino effect. And the second thing is the crypto. Because right now a lot of investors are in the crypto. It's getting heated. And when it crashes, it would create systematic sell-off as well. And we see that this two things are happening at the same time. Together with the worse than already low expectation of the CPI number of 4.2 yesterday, it doesn't seem like a coincidence. To me, this seems like a story planned ahead of time. So at this moment, I think a lot of people are bleeding, and yet on the other side, a lot of traders and short sellers are in paradise. In this kind of market, a lot of volatility is perfect for traders. Buy the dip, sell at any rebound, and then short it, making profit in both ways. Now that's it for today. We have had a rough day, a rough week, and a rough few months. So right now, I wouldn't suggest to stare at the market every day, but instead I would set stop losses and some limit order to sell so I don't need to look at my portfolio several times a day. And for any short-term trade, I suggest to just be happy with any profit, quick in and out. Now, if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you in my next video. That's it guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.